Welcome to Target the Trade. This is Fred Razak, Senior Trading Strategist here at CMTrading. And today I want to break down a trade that was a long lost symbol. But before we start, make sure to like, subscribe, and do share, especially if you find value in this presentation. Okay, so the symbol I'm talking about is Bitcoin. So Bitcoin has gone through a roller coaster of a ride, which is very reminiscent for myself of the internet age about 25 years ago, okay, where you had stocks like Amazon and Yahoo and eBay just be these massive high flyers, and nobody really knew what was going to happen with them because it was a completely new market. Now, if you've studied history, you could take it even back 130 to 50 years ago, where that was the beginning of the railroads, and there were all these type of companies that were starting up railroads between two destinations, and there was a massive flow of money into it, but nobody really knew which two destinations would ultimately be the most productive and most effective and the most financially sound in order to create those revenues, right? Anytime you had a route between one destination to the next, that route got to charge, just like we do with flights, right? Planes go from one destination to the next, and that route actually costs the airline a certain amount of money. Okay, but we're digressing here, but let's go back to Bitcoin. So Bitcoin has gone through a big cycle, okay? Initially coming out about 10 to 15 years ago, and then entering the market, nobody really knowing about it, going from almost $50 to $100. I remember those days, and I believed it was even overpriced then because nobody really knew what it was and didn't know how it was created, and then it went up to $400. And when it hit $1,000, that was for sure. That was way overpriced, especially at a time when stocks didn't even get close to those type of prices in those type of periods. The rest is history. Bitcoin hit 50, 60K way after that. But there was a point of correction because at a certain point, the market value, the true value of the market kind of seeped in to the price of Bitcoin, and it crashed. It came crashing down to about $15,000, $16,000. And so we are where we are right now. Now, I'm going to start out with a daily chart, and I'm going to go to a weekly chart. Now, we normally don't do this. We normally go with a longer time frame and then revert to the shorter time frame. But the reason I'm doing is this to give you both the short-term picture and the long-term picture of what could be next. Okay, so looking here at Bitcoin, it is a type of symbol that consolidates. Okay, it trades in a range, in a very tight range relatively to its size, and then it pops out. Okay, and then it trades again in a range, and then it pops out. It trades in a range, and then it pops out. This doesn't only happen on a daily chart, it happens on a 4-hour chart and a 1-hour chart. It's a type of symbol that is really pressed and pushed by market action, by activity, okay? And then there's like a bandwagon, and you could chase those type of opportunities, just you got to be very careful. Now, the other point here is also it's more designed, as it is right now, to be traded by a scalper as opposed to a position trader. You don't want to take this 2-3 days, okay? You want to take in and out, in and out, in and out, because there's enough volatility, number one, and number two, usually the follow through doesn't really happen until you churn for a while, and it might fake you out, and then you're going to get out, and then you're not sure which way it's going, and you go in the opposite direction, and you find yourself just spiraling from there. So it's a type of asset that consolidates, breaks out, consolidates, breaks out, consolidates. So keep that in mind. Now that may change moving forward, but for right now, that's how it's trading. Now we've got a Fibonacci to the weekly, and I want to draw to your attention that this was the low of where we hit about 16,000, and then we went all the way up to our highs of about 60,000, and then we retraced from there. Now, the Fibonacci retracements, as you can see here, have been somewhat less respected, let's call it nicely, okay? And they've been breached many more times, okay, in these type of areas, but on the extremities, they've held themselves through. But what's the point of this? Why am I drawing this? Because right now, we're hitting above our last resistance-ish, okay, and if we hit above it, okay, where we're trading right now at 51K, potentially we could go back to 60K. Now, yeah, it'd be great to catch the bottom of this and ride it all the way through, but remember, we're trying to trade, or we're looking to trade probability plays. And probability plays is when you have the probability in your favor. So if it's gone this far, most likely it's going to continue going higher. Does that mean that it's for sure going to go higher? No, it just means that it's on my radar as a possible push higher if the markets give it that push. So keep it in mind as this is still unfolding, okay, and it's coming back into play. Mostly because it's been more regulated as of recently, if you look at the news, but because that is the case, buyers are coming into it and pushing this higher. Thank you for joining us for Target the Trade. We'll see you here next time.